All right, we do have the closing bell sounding on this Friday, August 7th.
Let's take a look at the action in the market as prices settle here, and people seem pretty pleased with those jobs numbers. You see, at least in their reaction in the stock market, gains across the board. The S&P 500 rallying up 1.33% to 1,010. The Dow adding over 100 points, 112 to be exact, to 93.68, and the Nasdaq up 1.33% as well, finishing just over the 2,000 level.
All right, everybody. So let's get a breakdown of what drove markets today. A lot of things drove markets. Suzanne O'Halloran joining us from the floor of the NYSE. We've got Brian Luke and Michael Whitney over at the markets desk. And still with us is our featured guest, Michael O'Rourke. Suzanne, though, let's start with you and those gains today.
Well, that's right, Carol. You know, a very broad rally. Of course, the jobs data was the catalyst. We had a lot of other things fuel this market higher. This is the fourth straight week of gains. The S&P is now sitting at a 10-month high. Consumer discretionary stocks saw a big gain just in the last hour or so of trading. It was financials for most of the day, but as investors start to realize that consumer spending trends may improve, we saw money go into a lot of the hotel stocks like Marriott. Discretionary spending does include travel. Marriott was one of the strongest performers in the S&P. Starwood Hotels has a big international brand as well, representation. That was a big winner today. We know consumers have not been spending on discretionary items during this recession. That, of course, could be on the cusp of changing. Also, housing was a big winner today. As people, if they're able to keep their jobs, that presumably maybe they'll be able to stay in their homes. Perhaps the foreclosure rate will stabilize. We saw names like D.R. Horton rally today. Goldman Sachs was also talking about this company as being best positioned to survive or do well when the federal stimulus program ends. So that was a big winner today as well. And also some of the banks, not just the financials overall. AIG got a lot of attention today and this week, but we saw money go into the more stable banks, if you will, such as J.P. Morgan. That was a strong stock today. And you were just talking with trader Herb Curlin, and he said, you know, there is definitely buyer interest in some of those names, like a Bank of America. J.P. Morgan, again, was one of the Dow performers as well today. So those two banks got a lot of attention today. Carol, Matt?
You know, and Suzanne, we've been talking a lot about financials with our guests as well. They saw the biggest weekly gains. Do traders feel the worst may be over for this group?
Well, not necessarily. I mean, financials, as of last check, they are the second largest weighting in the S&P, so they are very important to this market. And again, if we do see index funds buying the financials, they're going to capture a lot of these stocks. But there is still a lot of concern about the government-owned financials, particularly such as AIG, because the government is still such a large shareholder in this company. They don't have the same freedom to do strategic decisions as other companies. There's less concern over Citigroup. I will mention that Citigroup is was one of the very active stocks this week.